This content is for educational purposes only and does not constitute financial advice. Trading involves significant risk. Always do your own research and consult a qualified financial advisor before making any investment decisions. What if I told you there is a single line you can put on any chart, and it will tell you, days or even weeks in advance, whether the smart money is quietly buying or quietly selling? No complicated setup, no fancy indicators, just one line, and it reveals what the big players are doing while the rest of the market has no idea. This is on-balance volume, or OBV. And it is, in my opinion, the most underrated indicator in all of trading. Most retail traders have never even heard of it. The ones who have usually ignore it because they do not understand what it is actually showing them. But the traders who know how to read it, they see things on the chart that are completely invisible to everyone else. They see accumulation before the breakout. They see distribution before the crash. They see the smart money tipping their hand, and they position themselves accordingly. In the first half of Phase 2, you learn to read raw volume bars, spot climax volume, judge trend health, and identify the AMD cycle. That was the foundation. Now, in the second half, we move into the professional volume indicators, the tools that turn raw volume into a precise, trackable signal. And we are starting with the best one. By the end of this lesson, you will know exactly how OBV works, why it matters, and how to use it to catch moves in AI and semiconductor stocks before the crowd even knows something is happening. Let us get into it. So what exactly is on-balance volume? OBV was invented by a guy named Joe Granville back in the 1960s. His idea was simple but brilliant. Volume precedes price. In other words, before a stock makes a big move, the volume tells the story first. OBV takes that idea and turns it into a single running line. Here is how it works. If today's closing price is higher than yesterday's closing price, you add today's entire volume to the running total. If today's closing price is lower than yesterday's, you subtract today's entire volume. If the price closes exactly the same as yesterday, OBV stays unchanged. That is it. Add on up days, subtract on down days. The actual number on the OBV line does not matter. What matters is the direction. Is OBV trending up? That means more volume is flowing into the stock on up days than flowing out on down days. The buying pressure is dominant. Is OBV trending down? The opposite. More volume is leaving the stock on down days. Selling pressure is dominant. Think of it like a bucket with a hole in it. On up days, water pours in. On down days, water leaks out. OBV tells you whether the bucket is filling up or draining. And if the bucket is quietly filling up while the price is going sideways, that is one of the most powerful signals in trading. Someone is buying without pushing the price up yet. That is accumulation. That is the smart money getting positioned. The first and most straightforward use of OBV is trend confirmation. When the price is in an uptrend and OBV is also trending up, the trend is healthy. Volume is supporting the move. Buyers are showing up consistently on the up days, which means the rally has real participation behind it. This is exactly what you want to see before entering or holding a long position. Conversely, when the price is in a downtrend and OBV is also trending down, the selling is genuine. The bears are in control, volume is confirming the decline, and you want to stay away from buying the dip until something changes. For AI and semiconductor stocks, this is incredibly useful. These stocks can be volatile, and it is easy to get shaken out of a position during a normal pullback. But if OBV is still trending up during a minor pullback, that tells you the big money is not selling. The pullback is just noise. The trend is intact. Hold your position or add to it. On the other hand, if the stock is rallying but OBV is flat or turning down, that is a warning sign. The price is going up, but volume is not supporting it. The rally is running on fumes, and a reversal could be coming. This is the simplest application. Price confirms OBV, or it doesn't. And when they disagree, pay attention, because that disagreement is called a divergence, and it is the most powerful signal OBV produces.
Let us talk about the signal that makes OBV worth learning on its own. Bullish divergence. Bullish OBV divergence happens when the price makes a lower low, but OBV makes a higher low. Read that again. The price drops to a new low, which looks bearish. But OBV is actually higher than it was at the previous low, which means less volume is participating in the selling. The selling pressure is weakening even though the price is still going down. Why does this matter? Because it means the smart money has stopped selling. In fact, they might already be buying. The price is going down because retail traders and weak hands are panicking, but the big players are quietly accumulating shares at the lower prices. The OBV line reveals their hand. This is one of the most reliable reversal signals in technical analysis. When you see a stock make a lower low on the price chart but OBV is making a higher low, you are looking at a potential bottom forming. The market looks weak on the surface, but underneath, the volume signature is shifting from distribution to accumulation. For the AI and semiconductor names, this is absolutely critical. These stocks can have sharp pullbacks that terrify everyone. Nvidia drops 10% and the internet is screaming that it is over. But if you pull up the OBV line and it is making a higher low during that drop, you know the institutions are buying the dip. That is your cue to start paying attention to a potential entry, not to panic.
Now let us look at the dark side. Bearish OBV divergence. This is the opposite setup and it is just as powerful. Bearish divergence happens when the price makes a higher high, but OBV makes a lower high. The stock is pushing to new highs, everyone is bullish, the headlines are positive, and it looks like the rally will continue forever. But OBV is telling you a different story. Less volume is participating in the move to new highs. The buying pressure is weakening. The smart money is not chasing this rally. In fact, they might be selling into it. This is distribution disguised as a breakout. And if you remember lesson 14 on the AMD cycle, this is exactly the distribution phase. The institutions have accumulated their position, the price has been pushed up during the manipulation phase, and now they are distributing, selling their shares to the retail traders who are buying the highs. OBV catches this because even though the price is higher, the volume on the up days is declining. The up moves are happening on less and less conviction. The bucket is starting to drain even though it looks like it is at a high point. For the semiconductor stocks, watch for this after extended rallies. After AMD or Nvidia runs up 30, 40, 50%, check the OBV on the daily chart. If OBV is failing to make new highs alongside the price, the rally is exhausted. The smart money is heading for the exits. This is your signal to tighten your stops, take some profits, or avoid entering new long positions. Quick pause. If you are getting value from this, hit that like button. It takes 1 second and it helps this channel grow so I can keep delivering this content for free. Subscribe and tap the bell so you catch the next lesson the moment it drops. And if you are leveling up your career alongside your trading knowledge, check out Resume Zenith, professional resumes that get you noticed. Link in the description. Alright, let us keep going because the next section is where this gets really practical. Here is something most traders never learn about OBV. It often breaks out before the price does. Think about what OBV is measuring. It is tracking the cumulative flow of volume. If institutions are accumulating a stock, buying consistently over days and weeks, OBV will start trending up even if the price has not moved yet. The buying is happening, but it is being absorbed by selling at the current price level. So the price goes sideways while OBV quietly climbs. Then, one day the selling dries up. There are no more shares available at the current price, and the stock breaks out. By that point, OBV already broke out days or even weeks earlier. It gave you the early warning. This is the cheat code. If a stock is consolidating in a range and OBV breaks above its own resistance while the price is still stuck in the range, that is a leading signal that a price breakout is coming. You can position before the crowd, set your stops below the range, and be ready when the price confirms. And it works in reverse too. If a stock is consolidating and OBV breaks below its own support while the price is still in the range, that is an early warning that a breakdown is coming. The smart money is leaving before the price reflects it. For AI stocks specifically, this is gold. These stocks often consolidate after earnings or after a big move, and the consolidation can last weeks. During that time, watching OBV tells you whether the stock is being quietly accumulated for the next leg up or quietly distributed before a drop. The price tells you nothing during a consolidation. OBV tells you everything. Let me walk you through exactly how to set up OBV on TradingView so you can start using it today. Step 1. Open any chart. Pull up Nvidia, AMD, SMH, whatever you are watching. Step 2. Click on the indicators button at the top of the chart, the one that looks like a test tube or says FX. Step 3. Type OBV in the search box. Click on Balance Volume. It will appear as a separate panel below your price chart. Step 4. Adjust the style. I recommend changing the OBV line color to something that stands out, like cyan or gold, so it is easy to read at a glance. Step 5. Add a moving average to OBV. This is optional but powerful. In the OBV settings, you can add a 20-day simple moving average. This smooths the line and makes it easier to see the overall trend of volume flow. When OBV is above its moving average, the flow is bullish. When it is below, the flow is bearish. Step 6. Draw trend lines directly on the OBV panel. Yes, you can draw support, resistance, and trend lines on OBV, just like you do on the price chart. This is how you spot OBV breakouts and breakdowns before they happen. Draw the lines, watch for breaks, and act when OBV confirms. Now you have a full OBV setup. Price chart on top, OBV with a moving average on the bottom, and trend lines drawn on both. This is a professional grade setup that most retail traders never use, and it takes about 30 seconds to set up. Before we wrap up, let me cover the 3 biggest mistakes traders make with OBV, so you can avoid them. Mistake number 1, focusing on the OBV number instead of the direction. The actual value of OBV is meaningless. It does not matter if OBV is at 10 million or negative 5 million. What matters is whether the line is going up, going down, or going sideways. Direction is everything. The number is nothing. Mistake number 2, using OBV on low time frame charts for swing trades. OBV works best on the daily chart and above. On a 5-minute or 15-minute chart, the signal is too noisy to be useful for swing trading decisions. If you are day trading, you can use intraday OBV with caution, but for the kind of analysis we are doing in this series, stick to the daily. Mistake number 3, ignoring context. OBV divergence is powerful, but it is not a standalone signal. Always combine it with the tools you already have. Check the key levels from Lesson 15. Look at the candle patterns from Phase 1. Confirm trend health from Lesson 13. OBV divergence at a key support level with a hammer candle? That is a triple confirmed buy signal. OBV divergence in the middle of nowhere with no level and no candle pattern? That is just noise. Context is what separates a profitable signal from a losing trade. Here is your homework for this lesson, and I want you to actually do this because it will lock in everything you just learned. First, open TradingView and set up OBV on the daily chart of NVIDIA or AMD. Add the 20-day moving average. Second, draw a trend line on the OBV panel connecting the recent lows. Is OBV trending up, down, or sideways? What does that tell you about the current volume flow? Third, look for any divergence on the chart. Compare the last 2 major price lows. Did OBV make a higher low or a lower low at those same points? Do the same for the last 2 major price highs. Fourth, identify whether OBV is currently above or below its 20-day moving average. Is the flow bullish or bearish right now? Fifth, combine your OBV reading with the key level analysis from Lesson 15. Is the stock near a support or resistance level? What is OBV telling you about the likely outcome at that level? Write down your complete analysis and your prediction for the next move. Then watch what happens. The cheat sheet for this lesson, including the full OBV setup guide and divergence checklist, is available free at candlelogictrading.com. That wraps up Lesson 16. You now have one of the most powerful indicators in trading, and you know how to use it properly. Let me recap what you learned today. OBV is a cumulative volume indicator that tracks whether volume is flowing into or out of a stock. When OBV confirms the price trend, the trend is healthy. When OBV diverges from price, a reversal is likely. Bullish divergence, where price makes a lower low but OBV makes a higher low, signals accumulation and a potential bottom. Bearish divergence, where price makes a higher high but OBV makes a lower high, signals distribution and a potential top. OBV often breaks out before price, giving you an early warning system for upcoming moves. And the key rule, never use OBV in isolation. Combine it with levels, candles, and trend health for the highest probability setups. In the next lesson, Lesson 17, we tackle VWAP, the volume-weighted average price. This is the line that Wall Street literally trades around every single day. Institutions, hedge funds, and algorithms all anchor to VWAP, and if you are not using it, you are missing the one level that the biggest players in the market are watching in real time. You do not want to miss this one. Subscribe and hit the bell. New lessons drop every Tuesday, Thursday, and Sunday. Smash that like button if OBV just clicked for you. Share this with a trading buddy who needs to see it. Leave a comment telling me what stock you are going to analyze with OBV first. Go practice, protect your capital, and I will see you in Lesson 17. This content is for educational purposes only and does not constitute financial advice. Trading involves significant risk. Always do your own research and consult a qualified financial advisor before making any investment decisions.